Hey, friends and family, I want to bring you a recap of today, stock market action and macro trends. Um, so let's take a look. Let's start with the S&P 500. That's the gauge that all fund managers use. So we have 2 days in a row, Friday and the follow through today. Usually, I say you need 4 days. Um, the 200-day moving average is where the S&P is 1% underneath the 200-day moving average, and it's 4.2% under the 50-day moving average. So that's the S&P 500, which is the standard when portfolio managers um, beta weight their portfolios for exposure to the market. And this is for individual investors, but hedge funds do this and mutual funds do this as well. um, I'm more active than passive investor. If you guys are in your 401k, I'm in my 401k, and I'll touch base on that as well. So you could take a look at we could take a look at that as well. Here's the Nasdaq 2 days follow through, still 2.2% under the 200-day and 6% under the 50-day moving average. The Dow Jones is right at the 200-day, so that's trying to get back over that moving average. That's called SMA, simple moving average. It's just an indicator which shows you the tendency over that time frame. One is the average of 200 days, and the other one is 50 days. And then the small caps, this one's been hit the hardest, is down 6% from both moving averages. A little bit. The 50-day is 6.4 to be exact. Um, when I talk about most individuals have their funds in 401ks, which is fine. That's passive over the long time. Over the long term, those tend to go up. I won't argue that. Markets over time go up for sure. Um, my 401k isn't that great. It has the BTC equity index, it has a JP Morgan large cap value fund, JP large cap growth, Fidelity International, JP Morgan mid cap. Then it has international here. Actually, this is a mid cap. This Fidelity one is another mid cap. This is the international and small cap. So get with your if you want to do some reallocation. I'm sure your 401ks have phone numbers that you can call. If you just want to set it and forget it and leave it there, that's fine. My approach was, I think the dollars, and this is just my opinion. The market doesn't care about anybody's opinion. It does what it does. Um, but I look at it, and I don't argue with the market. Um, it doesn't pay to argue with the market. I see the dollar rolling over. Um, we could take a look at the dollar index today. Let's look up the dollar index today. Very important to look at that. It was down 0.31%, and it is 103.40. So had another down day, and the dollar has been rolling over. So if the dollar is rolling over, there's a couple things that will happen. We will see higher inflation. It means that people are selling dollars. And obviously, if the US markets have been softer and the international markets have been doing better, that means those dollars are going to foreign markets. And I'll show you, um, we'll take a look at some China ETFs. I got into China ETFs personally in my accounts because the one that I have in my 401k, which is the FKIDX, and I try and keep this. And this one, this video, I'll post in my feed because obviously it's not a story; it's too long. But those that may interest you, you could take a look at the video in my feed. So the FKIDX is a Fidelity ETF that I have through my employer, and you can see here. Let me see if it has the holdings. So it has the top five holdings: SAP, Hitachi, Novo, ASML, uh, AstraZeneca, UniCredit, LVMH, London Stock Exchange, and Taiwan Semiconductor, which actually is coming over here to America to build a plant, if I'm not mistaken. Um, and the top country in this fund is UK, 18%. I don't know, it breaks down the other countries. That's where I was going with this. I wish it showed me here. Let me see if it tells me here what countries. Excellent. Here it is. Country diversification. So it's got 18% in UK, 17% in Japan, 10 in Germany, 10 in France, 5 in Canada, 5 in Switzerland, 5 in Netherlands. It actually has some in the US, 4.6 in the US, Sweden 3, Denmark 3, Italy, Spain 2, Taiwan, Belgium, India, and other countries. Very low percentage. That's why me as an individual, I keep pushing the China ETF because China's not here. And a lot of people take China with a grain of salt as like a bad word. But there was some news last night that they're going to try and put some policies in place to spur domestic um, consumption. Because remember, China has, if I'm not mistaken, about 1.2 billion uh, China population. I want to say 1.2 billion, 1.4 billion. So um, with these tariffs, they'll probably be exporting less to the United States um, because we're probably going to be consuming less goods because they're going to be more expensive. That's why I'm not a fan of these tariffs. But whatever, that's another debate. And the market is showing you that they don't like it either. So don't argue with the market. Um, so the China stocks, they're putting some policies in place and they look pretty decent today. Let's take a look at the so the K-Web, which is internet stocks in China, it actually broke out today. You can see right here, it's 3% from the pivot in 8 days. So it's still in the buy area. Invest at your own risk. Disclaimer, I'm not a financial advisor. These are my opinions, and it is what it is. I'm in this. I bought more today in the K-Web. It was up today 4%. It was better than the S&P 500. S&P 500 was up today 0.77, and the dollar also was down. So you got to take that uh, into your thesis here. Um, so KWeb, they have a basket of China stocks like Baidu, Alibaba. If you don't want to pick individual names, this is a good basket for those internet names of China. Pinduoduo, which is the owner of Temu, up on volume and up 3% from the pivot. Remember, you got to have rules. It'd be hard for, I'm not saying it will because China's been known to gap down. So you got to take it with a grain of salt. Have your rules in place. When you have an entry and you buy at a good point, remember, the most important thing is the buy in anything you do. If you buy a stock, you buy a house, you buy a car, it's all on the buy. Buy, buy, buy. So when you buy, make sure you buy it in a proper breakout of a base, and that's what we're seeing here in the K-Web. You buy it. You must have your rules in place. And if you do something like this, or you do another stock, or whatever, you got to take your losses at 7-8% and cut your losses. Don't argue with the market. Take your loss and move on. Um, that's just my advice. Now we're gonna look for this breakout here to advance. Uh, I think we can see an advancement here of easily. I'm looking for at least 15 to 20% here. And the FXI is the other Chinese name. I'm going 10 minutes on this video. I don't want to go too much longer, but we'll chime in on some other stuff that I really think is strong in the underlying market. This is another one that's strong today. It broke out. It's 3% over. It broke out. It's 3% from the pivot. Pivot being that basically that resistance that it had, it broke out, which is where you want to buy stocks when they're making new highs. You don't want to buy stocks when they're making new lows. You want to buy stocks when they're making new highs. That's where the money's going. I know it's counterintuitive. We're trained to buy. No, buy it when it's low. No, it's low for a reason. It may go lower. You want to buy you want to buy the best merchandise and where the money's going. And this is where the money's going because I watched the fish tank all day. So this is 3% from the pivot in 2 days. And obviously we're looking for 15, 20% profit and maybe scale out, depending how fast this thing moves. So the next one is the ETFs, the gold miners. I love the gold miners. They're doing really well. 4% from the pivot on the GDX. Now, these are the big established miners. And then the GDXJ. If you don't want to pick specific miners, I have posted specific miners. This one's 11% in 28 days. This might be a hold. It's up 11% since I've been talking to you guys a while back on this one. So, this one's up 11 and the GDX is up 4%. And these are miners. And gold is up 7% in 32 days from the pivot. And I think silver is starting to break out. I think it's the most undervalued asset on planet Earth. It's 2% from the pivot in 4 days. Um, and those are my favorite ETFs right now. Um, we talked about the broader market. We talked about 401ks. Pay attention to your money and your capital. Um, there's passive investing and there's active investing, and they both work. Nothing wrong with it. But those are some of my favorite stuff right now. I'm gonna cut this video because I'm already at 12 minutes, and I might do some individual names here shortly. See you later.